You were listening to chartingwealth.com for Wednesday, the 15th of June, 2016. Thank you for your patience. We are traveling again today, and we are coming to you remotely, but as we always try to do, I think we've only had one down day for technological and other glitches since we started the broadcast. We are so happy to be with you, try to help you every day. We know how important it is to track the market on a daily basis. Here's what we're going to do. We're going to go through our three indexes, and we're going to go through gold. I hope there's not too much extraneous background noise. If so, forgive me. Just remember, we're doing this for you at no charge, so bear with us when you have to. Now, let's jump over first to IYY. What is that? Well, that, of course, is the two-day Dow Jones iShares Total Market Index Fund. We're looking at a two-day candle, and we have two-day candles of down movement. We crossed through we crossed through our two-day trend line back on the 13th of June, and we've seen the next two-day candle that's starting to form on the 14th going down also. Now, the market itself was down 0.39% for the day. Have a huge candle. Remember, the kind of candlesticks we use are the Heiken Ashi, Heiken -ASHI. That in Japanese means average pace, average movement. It's calculated differently from the standard type of candlestick. We love it because it really helps us see changes, differentials in price movement. It helps us track truly the average pace, I believe, of price movements better. That's why it is so big, because it's actually calculated differently, but it's showing us a real change in price. We have a confirmed crossover now with this new candle forming from the 13th as the market crossed over going down with that big down movement yesterday, followed by the down movement. When I say yesterday, I mean Monday. I'm recording this, of course, for you the evening of the 14th for Wednesday the 15th. So we had down movement on both Monday and Tuesday in the market. Still don't have the derivative oscillator flipped over. We like to see the MACD crossover and the derivative oscillator at the same time. That has not happened yet. Now let's look at what occurred on the half-day chart. We've seen the half-day chart cross over all the way back on the 9th. It slid sideways later in the day on the 9th, and then, of course, the real down movement started on the 10th of June, running throughout the course of the 14th. Now, we do see that the down price on the 14th is matched pretty much in the morning and the afternoon. Haven't had any hiccup, haven't had any pullback either on the candles, much less on the MACD, on our indicator, or the derivative oscillators continued to accelerate down. So strong down movement on both of our charts. We're going to go back now to the two-day chart. We're going to look at the S&P 500 as depicted by SPY. What does that show us? Well, it was down about half of what the total market was. It was down 0.18%. I'm going to brighten the screen up a little bit for us. We see that it also has 2 days of down movement crossed over. Look, the chart looks very similar to the total market. The chart also crossed over around the 13th or so, and we have those two-day candles of down movement. Now, if we look at what happened intraday on the 4-hour chart, we see that again, crossover around the 9th, market went sideways throughout that day, and then the real shot down, crossing over the 2-day trend line the afternoon of the 10th, and it's continued to move down. So confirmed down movements, again, no pullbacks at all, particularly after the market crossed over on our MACD on the 2-day chart. No pullback for any entry point on a down move yet. And again, don't forget, we do have the possibilities of jumping into the market on down moves. There are inverse charts with the S&P 500 and with the Qs, which we're going to next. What did the Qs do? Well, the Qs was actually up 0.01% for the day. However, we see that we had the kind of thing we like to see. We see that the derivative oscillator and the MACD crossed over going down on the Qs on the 2-day chart. gives us more confidence of a confirmed down move. Of course, the Qs broke through the 2-day trend line way back on the 9th of June. So please keep in mind now that we can redraw our trend line at this point for the downward movement that we're seeing. Those of you who are watching visually, I'm actually redrawing the trend line. Remember, bottom up, top down. So we have redrawn the trend line. Now we have a confirmed down move, so we do redraw it to track that on the Qs. If we look intraday on the 4-hour chart, what do we see? Well, we saw the Qs crossed over going down actually all the way back on the 3rd, but what did it do? We tracked this. It went sideways until the 9th and then started its downward progress. We do have a little bit of a backup on the 4-hour candle, so we'll see how that plays itself out. Those of you who like to use the candlesticks, our Hinkin Ashi candlesticks for your entry points, might be paying attention to that. If that is a confirmed backup and then moves back over sometime tomorrow, you might think about getting in once you have a closed candle for that. Again, always pay attention to your MACD and your indicators. You do see the derivative oscillators losing some of its energy. So that is where we are as far as the Qs, the total market, and the S&P 500 goes. Lastly, we're going to range back out to our 2-day chart one more time, and we're going to look at gold. What do we see going on with gold? We have a confirmed up move, a crossing over going up. On the charts on the 13th of June, had continued up movement over the course of Tuesday the 14th. The charts were up for gold 0.11%. We have 1, 2, 3, 4, 5 2-day candles moving up. We also saw nicely when the MACD crossed over, derivative oscillator crossed over from negative positive about the same time. Waiting for a backup, see what we see in gold. We see that gold crossed over on the 2-day chart back on the 3rd. And again, the derivative oscillator flipped at about the same time the MACD did. And gold has moved up since then, slid sideways for a couple of days, and then really started acceleration around the 8th. About the time the market started falling off, gold started moving up. We did end the day with what we would call, it's not a hammer really, it's more like a doji or more like a doji for the afternoon. So a bit of a pullback there in gold. For those of you who want to try to find an entry point for getting in, watch carefully. It does look like the MACD is decelerating. It might be crossing over, going down. That would be the pullback we're looking for. And then if we see renewed up movement, you might have an entry point in gold. This is why you need to pay attention to what's going on these charts every day. And the way you're going to get good, the way you're going to develop that intuition, that ability to sort of know what's coming next, is to pay attention to these charts every day. But you never substitute your intuition for what the charts are telling you. But you'll find yourself, the more you do this, being able to forecast what the charts are probably going to do. They can always fool you, though. Why? Because external events can always affect the market. People can die, planes can crash, economies can go to war. You never know what's going to happen, so it's important that you pay attention to the market on a daily basis. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. If you don't already receive our newsletter, you need to. We'll send it to you every day, plus the weekly review and forecast that usually goes out Sunday nights. We really appreciate you being with us. You want to help us out? Ask you to do one of two things for us. The first is go to iTunes, subscribe, give us a 5-star rating, say something nice about Charting Wealth. The other, and if you notice, those who are listening, who are watching on video, we are now using more and more YouTube. We would very much appreciate if you would subscribe to our YouTube channel. Once we get up to 1,000 subscribers, and we're well over halfway there on YouTube, we will then be able to actually do our own proprietary broadcasts for you. They require 1,000 people to actually be subscribed. And of course, we have many thousands listen on iTunes, but we'd very much appreciate you subscribing to the channel. That'll help us get to that 1,000 number much quicker on YouTube and we'll then be able to start offering you some proprietary broadcasts. So something to think about. We'd appreciate your help. Again, we love to hear from you. Email us, give us comments on Facebook, Twitter, Instagram, YouTube. Thanks so much. We appreciate you listening, and we hope you find what we do helpful each and every day at chartingwealth.com.